Welcome to Stock Talk with Mike. Today I'm going to really quickly cover 10 stocks that have absolutely explosive revenue growth. We're talking nearly 100% or more revenue growth as of late. If you watch my channel, you know I really love revenue growth. And all of these companies already had significant operations and revenues to begin with. None of these are speculative biotechs that maybe had a drug come to market or anything like that. So I'm hoping with this list, it can give you some ideas of a company or two to maybe add to your watch list or even to consider purchasing on a pullback with a little further research. And if you're new to the channel, please consider subscribing to the channel. It'd be great also if you'd like this video. First is Roku, ticker ROKU. So they have the largest smart TV streaming platform in North America. Virtually every TV you buy now has Roku capabilities built into it as well. And they get their revenue through subscription services as well as advertising. And they've been absolutely killing it. So last quarter, they reported 73% revenue growth, and that was already off of very high revenues. And analysts are still expecting a further 48% revenue growth in 2021. Next, we have ticker symbol Pins or Pinterest. So they have sort of the visual discovery, do-it-yourself, home inspiration platform, basically application that puts pictures in front of you that you might be interested in for do-it-yourself projects or crafts and things like that. And they've obviously recently started incorporating advertising, and they're having really good uptake in terms of ad buyer conversion with their targeted ads. And they have 440 million monthly active users now on the platform, and that's growing very rapidly. And I totally missed the boat on this IPO when it was closer to $20 a share, now trading at over $80 a share. And they're absolutely killing it. They have 76% revenue growth in the recent quarter they reported. And next year, analysts are still expecting 44% revenue growth. So still growing rapidly and still relatively small, and I think has a lot of room to run still in the advertising space. Next is ticker MELI, so MercadoLibre. They are the Latin America-based e-commerce play. They also have Mercado Pago, their sort of digital wallets, as well as a lot of these international e-commerce players seem to have their digital wallet component as well as a key part of their business. And this is one of those real success stories. They're now close to $100 billion market cap and growing like an absolute weed. Look, the shares have gone from under $400 a share to just under $1,900 in the past year. And this is why their revenue growth. So Q3, last quarter, they reported 85% revenue growth. So you can see a theme here. These are getting bigger and bigger. And analysts are still expecting next year, even at the size of this company now, that they'll have 56% revenue growth. That's massive revenue growth for a $100 billion company. Next is Crowdstrike. So that's ticker symbol CRWD. So they offer through their Falcon platform cloud-based endpoint cybersecurity protection. And I think this is also one of those industries with cloud computing and also cybersecurity, just two areas that are just going to continue to grow as there's going to be more and more demand for cybersecurity and more threats. And I think it's an area that everyone should have some exposure to and is growing incredibly quickly. I've owned shares of Crowdstrike since it was in the $50s and $60 range. And now currently it's trading up to 231. You can see in the last year, it's moved from around $50 a share to 224. And again, just seeing massive revenue growth. For the full year 2020, they had 86% year-over-year revenue growth. And analysts are still expecting for 2021 to see about 70% revenue growth. So this is definitely a company and in an industry that's just seeing massive growth, and that's gonna continue. Next is Shopify, ticker SHOP. So Shopify really is the go-to platform for any sort of online small business. Most of them are going to use Shopify for their commerce side of things. And they operate completely internationally. It's a company I'm very interested in, do not have a position, and just sort of waiting for a pullback. And they don't really seem to happen with Shopify. So in the last year, it's gone from, I don't know, from maybe $100 a share or so. I can't even see it way down there to over $1,400 a share. So just a massive run in the past year. And it's just seeing, again, incredible growth. In Q3, they reported 97% growth, and analysts are still expecting it to grow again, a further 53% in 2021. So this looks like another company that I think still has a lot of runway ahead of it. And a ton of commerce still isn't online, right? I think we have under 12% online commerce penetration. And I think more and more shops are going to look to continue to operate independently off some of the big platforms. So I think Shopify is going to continue to do well. And this is a company, like I said, I'm extremely interested in. Next is DraftKings, ticker DKNG. So they're the online sports gambling play. They also in the iGaming, esports side of things as well. This is an industry, obviously, that has a ton of demand, especially in the sports betting side of things. But there's historically been a lot of regulation behind it, and that's easing. And that's going to be a real tailwind for DraftKings moving forward. And we saw a bit of that last year with there being such high demand, despite 2020 really being a crappy year for sports due to the pandemic. We still saw massive growth for demand of DraftKings products. This is a company I actually own. I bought in, I think, around the mid 30s. It came public via SPAC, and since then at $10, and since then has been on an absolute tear over the last year or so, up to over $60 a share. And last quarter, they reported 98% revenue growth. And I think this is a trend that'll continue, especially as regulations continue to ease in the sports gambling space. Next is Teledoc Health, ticker TDOC. So they're the leader by a mile in the virtual doctor space. They have over 60 million customers and are still just growing like an absolute weed, stealing market share. They offer everything from regular doctor checkups to mental health to chronic care conditions as well. And honestly, I think like a lot of people see this as a COVID-19 play, but I think it just accelerated this trend, and I think it's only going to continue. This industry is only going to continue to grow in the future post-pandemic. I don't think we're going back to more in-person visits where they can be avoided. And they're just seeing incredible growth. And I do believe it's been accelerated by the pandemic, but I think even outside that, they were already growing like a weed. This is also a company I own. I've actually owned this one since back in the 30s for, a year or two now. And it's currently trading, in the last year, it's gone from, under $50 a share to now in the 290s. And that is because they've seen just incredible revenue growth. Last quarter, they reported 109% revenue growth. And despite that, and despite getting to be a larger company, by far the largest in the virtual doctor space, they're still expected to grow revenues by 68% in 2021. So that's absolutely incredible, and they have a history of beating those numbers, so we'll see what happens with Teledoc. Next is C Limited, ticker SE, and I really like this company. They're based out of Singapore and offer an e-commerce platform called Shopee in Southeast Asia. And then they also have a digital entertainment platform that hosts mobile and PC games. And that's sort of where the business got started, in the digital entertainment side of things. And then they've grown their e-commerce side now to be almost equally as big. And then like a lot of these international e-commerce plays, they also have a digital wallet component in Shopee Pay. And this is a company actually that I've owned since I was a bit late to the party with C Limited. I purchased shares around later in 2020, and just a small position, but they just sort of skyrocketed since then, and I haven't been able to really add to my position since then. But about a year ago, they were trading at around $30 a share, and now it's trading at over $270 a share. And they're just continuing to have absolutely monster revenue growth. And that's what I love about C Limited. And they're in a market that's just going to continue to grow for sure. So the revenue growth last year was 113%. So just incredible revenue growth. And analysts are expecting for the full year 2021 still to have 86% revenue growth. And who knows, they might beat that. It might be closer to 100 again. And this is a company now that's $138 billion market cap and still growing at 100% rate. So just incredibly remarkable, fantastic company in C Limited. Next is Etsy's, ticker ETSY. So they're the marketplace for homemade or independent or small businesses. And honestly, it's one of those companies that for whatever reason, my own biases or whatnot, I just never paid it any attention. I wasn't really interested in it at all. And I've really been wrong about this company because they're executing extremely well. And that's shown again in their share price. It's gone from under $50 a share to over 225 in the last year. And just incredible revenue growth. In Q3, they reported 128% revenue growth. Again, probably a benefactor of the pandemic as far as more people starting up small businesses, trying to make money from home, more people shopping online. But again, this is just a trend that is growing in general anyway. And analysts are still expecting around 45% revenue growth in 2021. Last but certainly not least is Square Inc., ticker SQ. So they have sort of the small business ecosystem, which offers the payment card readers, also record keeping, and even small business loans. And then they also have the digit wallet side of things with their Cash App that can be used to send and receive money, buy and sell stocks, or even Bitcoin. Really interesting company. And they've been on a huge run. Now, this is a company I've owned for 3 or 4 years now, since it was in the 20 some odd dollars per share. And I've trimmed my position along the way and then added on some pullbacks like in March. So I don't even know what my cost basis is anymore. But over the last year, it's gone from, definitely under 75, maybe closer to $60 a share to $257 a share. So it's been on an incredible run. And it's seeing very big revenue growth, largely due to the trading of Bitcoin on the app. But their other verticals are doing absolutely fantastic as well. And they've shown incredible resilience despite the pandemic really having a large impact on their forward-facing business front, small businesses that they operate with. The fact that they're crushing it and crushed it in 2020, just speaks to how good they're going to be when those things open back up. I can't wait to see it, honestly. Analysts are still expecting 103% revenue growth again in 2021. So this company is not going to slow down. I expect great things to continue here for Square. I got all these companies here behind me, and one thing they all have in common is they're all skyrocketing to the upper right. And I think that's what happens when you have companies that are absolutely killing it as far as revenue growth. But word of warning here, they all trade very expensive. And companies like this that are executing are never going to trade cheap. But at the same time, I think you have to be cautious here. I mean, I don't know if these companies a lot of them have moved 300% in a year. And I don't know if they're 300% more valuable, given the fact they maybe saw 100% revenue growth, for example, right? So I think you have to pick and choose. Again, I own 5 of these companies personally, and I've trimmed some of those positions even back a little bit just to keep them appropriately weighted in my portfolio. But at the same time, the ones on my watch list, I haven't really actively pulled the trigger yet either. I think there'd be better buying opportunities for a lot of these stocks, but I do believe in them long term. So if you're newer to investing and trying to build out a portfolio, I think it's okay to take a small starter position in some of these companies potentially, but be prepared to add more on big pullbacks and get excited about big market pullbacks. That's the best opportunity to buy. We should want stocks. If you're not close to retirement and you're a long-term investor, you should actually be doing completely reverse thought of what most people actually do, what you see on the forums and whatnot. You should actually be getting pretty excited about big market sell-offs. And make sure you have strong conviction. Do your homework behind these companies. Know why you're buying them. And if those reasons haven't changed and that thesis is strong, if a company is absolutely tanking, you should like it more. You shouldn't fall in love with the stock just because the stock price is going up. And you see that a lot. But there's nothing wrong with the stock going down. Sell-offs are normal. And at times there's going to be more sellers than buyers. And that's a really good thing. That's a really exciting thing when it comes to good companies that are growing, that are disruptive. But again, you do have to continue to look at the companies that you're either interested in buying or that you hold and make sure that no underlying fundamentals have negatively changed that make you not want to own the company for the long run. But most time, big sell-offs just create further buying opportunities. So I think these are all companies worth putting on your watch list and doing further research on. And if you have really high conviction based on that research, then if we see a bit of a sell-off, consider starting a position in one of these companies. That's all I got for today. So thank you so much for watching and happy investing.